Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber. Monday, June 27th, 12:34 p.m. New York time. This is another update on trading options, beginner's guide. The last one I posted was Friday, June 24th. And that video was showed the same day to my tier level 2 or 3 Patreon members, and YouTubers, again, have to wait till another day. That's the benefit being a subscriber to the Patreon page. So last Friday, the stock ETF SPY, Sierra Papa Yankee. Again, it's a stock ETF for the S&P 500. The video showed the price was back then was 387 and 30 some change. So now it's higher. Yep, it's higher. And the option change specifically, contracts I was mentioning was the 1 July, the last two numbers there are for 2022. And that number was 7, saying there were 7 trading days, 7 calendar days. Now it's 4. That's good. So it's getting close to expiration, but you can still trade it because it hasn't expired yet. We're here, June 27th, shows 0. Those expired today. Let's focus back on the July 1. And the strikes I was mentioning was 387. That was one of them. Let's cue this up here. So you just have it. So 387, the ask back then was 556. It's higher now. Yep. Again, you're buying options at the ask and you're selling options at the bid, just like stocks, futures, and Forex. You buy at the ask and you sell the bid. So if you had bought it, when I showed it back then, the 387 contract calls, and then you would be closing it out at the ask, you have a gain because you would bought it back then at $556, closing at $570, $580 now. That's nice. That's a gain. Closing it for a profit. Beautiful. The other choice was, I mentioned if you want to go further out, was the 390 contract. Yeah, it lost less money. It's further away from the underlying. Remember, the underlying is here, the stock. That's the underlying. So the 390, oops. Let's cue on the right one. Back then, on Friday, the ask was $409. So now it's at $420. Again, it's higher. And then if you bought at the $409 or got filled at a lower price, which is better, you can close right now at $420 and have profits. Again, I mentioned I was bullish biased because we were coming into the weekend. You can also check back the video and see, because I mentioned what the open interest was. So today, for the 390, the volume is 20,427 contracts, and the 387, 2,448 contracts. Again, the open interest gets updated typically when the market closes or just before it opens the next day. Yeah, so a lot more trading activity. Again, those trades could be open and close anytime during the day. We don't know what time today, just know between 9:30 and the time right now they've been traded. So this may be even higher at the close of the day or late afternoon and into the close, whatever this is, will be added onto here. Same on the other side. But I'm less interested in these because I already know from experience this is a very good liquidity financial instrument to trade. But let's go look at the chart, the daily chart on the SPX. Remember I said the SPX is the cash, the big boy, and the SPY trades as well, a mirror it. So you could trade options on the SPX too, and that's what I trade. Last week, huge green candle, impulse move up, nice breakout. For me, charting technically, that was a entry period if I caught it when it broke up with that. Today, good entry would have been on the break above here, or if you wait, and if it does retrace to midpoint, if you see a trigger that you want to buy, go ahead and buy. And I'm thinking we have a good chance of testing this gap. So have a momentum up. Yeah, maybe we'll have a little consolidation, but maybe for the end of the week, we'll continue up. But options, when you buy them, regardless puts or calls, when you buy them, time decay works against you. Yep, time decay works against you. So you want it to move in your direction, the underlying, rapidly, depending on, again, how much time you have to expiration. So on the weekly, the SPY, remember I drew the 390 contract. That's the weekly candle. Oh, sorry, daily. We're looking at daily here. And look, we're currently trading, again, mentioned above. So let's look at the weekly so you can see. This is the weekly. And if we're going to do a contracts that have 4 trading days left, I like to look at the higher time frame and try to figure out what the range it might be able to move. Well, you can look at the prior week, look at the low and the high. And it was at an average trading range. Yep, it says about average trading range. So use that as a mathematical way, figure out, well, we might have a trading range to go to the upside. And you could look at the faster time frame, the daily, and then figure out the high and low for the strikes. So if you're still bullish, or if you're bearish, you do the inverse on puts. But if you're bullish still, well, you can look at these strikes now. So it's 389, 389. And you may not want to put down all that capital for these premiums. Remember I said these options, the prices of the options are called premiums. So 389, so if you're still bullish, let's go further out. 390, let's just take consideration. Look at the higher strikes, look at the 395. And let's add up a few more contracts in here. Now it shows 25, so I have 25 strikes here, but I want to go out one more. Let's do 27. There we go, 400, and we'll also do the 400. So at the 390, 395, 400. Let's label them on the charts. First one, 395. And the other one, 400. Oops. And 400. There we go. Let's take off some of that. So we know the orange one was last week. That orange line was last Friday. So again, the range. Let's look at the weekly. There we go. Oops, the weekly. Now we're looking at weekly. Yep, there's a good chance because look at this huge candle. That's above average move, but that's within an average move. So the low there was 370 and some change. The high there was on the green candle. The green candle was 390. Well, let's just do that. 370, subtract 390, and say we know that's 20. So we take the high of that green candle, which is 390. Let's add 20 points. So 410. So 410 is a potential move to the upside. Well, 410 is above these strikes. So those have some credibility to consider trading those if you want to use strikes that are away from the underlining. There's the underlining 389. If you want to buy a 389 strike right now on the call side, 493. If you want to do the 395, it's 236. And if you want to do the 400, well, 110. Maybe you want to do even spending less capital. Let's cue this up to 40. There we go, 40. Now we're looking at 40 strikes. Maybe you want to do the 405. The 405 is at 46 cents. Well, again, we mentioned 389 or 388. Let's just take 389 because from there, and let's just add 20. 409. So from that price, there is a possibility that we could get up there. Yeah, there's other mathematical formulas that are already built in here that I could show you that gives you those numbers where I'm getting at, but nothing wrong with doing the old school method to keep you situational awareness on how to do math. And I'm not the best in that. So there you go. If you think it's going to continue going higher, again, you want the momentum, 405. Let's add a 405 on here. There's 405. Let's look at it at the daily. So now we're looking at the daily. Yeah. Yep. So here's the consolidation, which I mentioned. It might be running up there to fill this gap. So the 400 is in the gap, the 405. So the higher probability is, yes, more likely going to test this gap. Here's the gap, fill the gap 400. So the higher probability is the closer to the underlining. So these further ones that are less money have higher risk and have a lower probability. But again, you can still win. So we'll leave it here and let you decide. Many thanks for watching.